Ladies and gentlemen of the crypto space, we're live on a Monday, November 1st at 11:35 a.m. We're trying to figure things out today. We're trying to figure things out every day. What do you think of the title of the stream? What do I buy? What do I sell? What does the general public do? You know, we've seen these periods of time several times throughout history, particularly from the perspective of the crypto space. Every time the market gets hot, everyone thinks the world is changing and they're like, woo, what do I do? How do I catch up? How do I get in on this big next thing? And it's a hard question. And I don't come at this from any type of sentiment, good, bad, definitely no judgment. It's a complicated topic. I cannot express to anyone years of experience in a matter of a couple of sentences. Just as I'm talking to you right now, it's an entire conversation. So it's going to be a lengthy conversation. You guys better stop me. Better stop me because if I keep going, this monologue is going to be big. How do I tell people? You can't tell people what to buy. You can't tell people what to do because then folks won't know when to buy and when to sell. They need to gain their own experience. We can provide guidance, suggestions, ideas, dialogue, conversation, advice. That's really what a financial advisor is. And thus why what I provide with this stream is, by definition, financial advice. I cannot be a custodian. I cannot handle securities because of the rules of the SEC. But I can handle the crypto assets. They're not securities. They don't fall under the rules of the SEC and those Series 55, Series 7, and those other license examinations. I'm not going to be a custodian. I don't have the time. Although I wouldn't mind maybe managing people's capital at some point. But that's a full-time job. That's an entire business and industry unto itself. And that definitely would require like a broker-dealer or some sort of licensing to custody assets. But not now. I don't think that's in my cards now. I still like my programming. I like the company I work for. And I like talking to you guys. I like giving you guys free information, free education. I like my monologues. I like to talk in the morning. It's like I get coffee and I talk. That's the best morning I could think of. All right, let me catch up on these comments. Let's pop it over to the main screen. Let's get up a good chart. What kind of chart? What are we looking at? We're going to look at a good chart today. Let's look at that chart. Let's see what chart that is. I'll tell you guys in a second. No horns, no tail is in the house. 360 to 180. I think you meant spell. No horns. Yell to the moon. Kaizen, good day, sir. Equilibrium in 3 days. Not quite sure the reference. Klaus von Bob's in the house. Fife, Professor J, Larry, Paul, Daniel, Morlabi, George. Larry, what do you have your stablecoins in right now earning yield? Pick something on Convex. You don't have to think about it too much. All right, fine, fine. Convex is expensive. It's Ethereum L1. Gas prices are running around at 389 with a priority fee of 2. That's expensive to run through a main chain transaction. It's good that you look it on Polygon. M stable, that is a risk spread out, a risk minimized stablecoin asset. Great. UST, M stable, Frax, Polygon. I like everything you threw into that sentence right there, including the cheap transaction fees of Polygon. Hope that helps. But otherwise, I know there's opportunity overload even with stablecoins. How the hell do I tell that to someone from the general public? You know, friends and family ask me, what do I do with money? I have some money. What do I do with it? But you guys that are so accustomed to the crypto space, you realize how difficult it is even to set up a Gemini account and set up a Ledger wallet and extract GUSD or DAI or USDC into your ledger to interact with Pick an Exchange, Uniswap, Paraswap, Sushi, to swap one asset for another, or even to interact with Aave or the Curve platform, or the Curve platform first and then the Convex platform, or just understanding and learning how to interact with a Ledger hardware device. There's a massive, massive learning curve for the things that we do, which definitely um, not prices out, but it kind of techs out. It techs out. I coined the phrase right there. You see what I did right there? I coined the phrase. It techs out a large part of the population that are not in a position to execute, technologically as such. And I myself get a little disappointed about that. I empathize with that situation. I know everybody wants to outperform and wants to manage their capital and grow their wealth and not be screwed by the banking system. Can you imagine having like 100 grand in the bank and then the bank says, you got 100 grand here. Would you like us to help you manage it? I'm like, you fucking bank, get your dirty hands off my money. You leave my money alone, bank. You don't touch it. You're going to fuck it up because that's what banks do. They have no capacity to manage the money. They have no skills with regard to allocating capital. Don't trust the stock market, the equities markets. I don't trust it at all. Hands off. Manage it myself. They've done shit for me over the years. The SEC, with their investor protections, they literally have screwed me on both ends. I've had some stocks over the years. I still have plenty of stocks. One of them was a company called Nemaska Lithium. Well, I don't even remember what year. This must have been like 2, 3 years ago at this point. But the SEC protects investors. They let this company sure as hell go bankrupt. I lost $250,000 when they went bankrupt because the SEC protected me. And then the SEC protected me from a DYDX airdrop. And then the SEC protected me from a GODS or was it IMX, Immutable X? Whatever that airdrop was. The SEC screwed me in the securities market as well as the crypto space. The SEC has literally caused more pain than they have not protected me whatsoever. They've only caused me to lose money. Isn't that a fascinating reality? Because they didn't protect me in securities. They caused me to lose money in the crypto space. Holy shit. If a bank asks you to manage your money, tell them, get the fuck off my money. They have no business touching your money. All they do is what all government agencies will do is mess it up. So I don't know. What would I tell the general public, friends and family? I don't know. And it's a hard thing because I'm not going to manage capital, as I said. But I can provide education. Like, I love answering your guys' questions. I was thinking, like, I could tell folks to just go stablecoins. Just lend on Gemini. Gemini Lend. Coinbase got screwed with the SEC with their Lend product. But Gemini's Lend product is up and running. But their Lend product is pure rehypothecation, which is not necessarily the same type of Lend product that Aave provides. And certainly not the same type of interest-bearing dollar-denominated products that Abracadabra provides. We have a Yearn, which is built on Curve, which is put into Abracadabra, which allows you to leverage a yield-bearing dollar position or borrow dollars against a yield-bearing dollar position. Damn, that one sentence. I would never be able to tell that sentence to anyone in the family. They would never understand it. It gives me pause. How the hell do I tell anyone what I do? Nobody understands what I do. Nobody understands what I do. I hope I don't get lost to the anal. What do they call the annals of history, the story of history? I hope I don't get lost to history. What I do. I guess you guys know what I do. I just hope I help. Anyway, Pipes in the house, Professor J, Stephen, Larry, Paul, Daniel, Morlabi, George. Um, Daniel, can you elaborate more on cash flow versus savings? Those are two interesting words. Cash flow. What is savings? Because why would you put dollars in a bank account? That's what savings used to be. Dollars in a bank account. But why the fuck would we do that if we could put savings to work generating more cash flow? So cash flow is more important than savings. Who gives a shit about savings? Savings is like 1960s white picket fence, mortgage, car, 2.5 kids type shit. Maybe what Robert Kiyosaki says is probably the best way to describe savers. Savers are losers. Anyone who saves money is losing. In a world where savings is constantly melting, cash flow is king. Cash flow is everything. You want the balance sheet to be productive, producing constant cash flow. That's a great question, Daniel. Savings versus cash flow. Fuck savings. I want more and more cash flow. I want to own more and more business. There's nothing honorable about savings anymore. They destroyed savers. That's what they did. BK. I'll keep on sharing. Yes, indeed. Kazan, if you want to succeed in this space, you need to get your hands dirty by yourself, hopefully with guidance, though. Ain't that the truth? The captain knows the deal. Captain got his hands dirty. The captain has guidance. I can't do for my family literally what I helped the captain with the other day. My family, the general public can't do what you did. Like literally something as simple as that, like understanding a ledger hardware device. So it's very interesting. You either can be helped, you can be guided, but is it a fair statement to say that there's a good part of the population that cannot be helped, that cannot be guided, that cannot be educated? Strange thoughts on how to deal with reality and how is society constructed, the different participants in society. There's truly a large population in society. And is it the majority? Is that who the politicians talk to? I believe that's actually who the politicians talk to, the people that don't really have their own opinion. They listen to the news media. The news media tells them the COVID is scary. The news media tells them the Democrats are socialists. The news media tells them President Trump is awesome. And meanwhile, all of this is just stories. It's all just stories. It's all just stories, guys. And what are we if we cannot tell our own story and make our own conclusions and make our own assessments and come to our own conclusions? What are we if we can't do that? And I don't want to say it. I don't want to say what are we if we can't do that, make our own assessments and come to our own conclusions. That means we're just servants, serfs, participants in a system created for us. Slaves in many regards, economic slaves. So come to your own conclusions, draw your own assessments, write your own book, define your own narrative, make your own money, don't save, create cash flow, own business, whether it's digital or physical. I don't give a shit if you open a fucking convenience store. Open the convenience store and make a cash flow on a daily basis. I would say that's inefficient and there's opportunity cost associated with it. Who the hell wants inventory when you could generate 30, 40, 50% of your money on the crypto space without blinking an eye? And the general public hasn't touched this shit in 2 years. It's right here, right in front of them. What am I looking at, actually? I'm looking at Rook. So Rook came back on the radar, and from a technical standpoint, it looks good. Anyway, that was a hell of a pivot. from a continuation of my opening monologue into the technical analysis of an asset that I've had up on the screen the entire time I've had my monologue. Um, Let me do some comments and go back and forth, and I'll look at technicals on Rook. No horns, no tail. FTM, Spirit Farm, 100% APY. Big deal. I like Spirit. I got a fair amount of in Spirit. Booster, Captain, can Spell really go higher at this point? I heard big names like Tetra and Justin are getting in, but it has gone up so much. Scared to add at this price point. I wouldn't be buying, but that's just me. Me telling you guys I have no idea how to get entries in assets that are up 30, 40, 50x on the money. My spell position is 30x. I got a 0.0006. 3 zeros. So I haven't bought anything. I bought a piece of Rook. I took a little bit of Rook. This is when you get entries. You get an entry just as I've historically always told you guys. Breakout, retest, and the higher high. And to me, that looks like a pretty solid entry. You know, you guys, or the general public, is like, how do I get in on something that's up a bajillion frickin' percent? This isn't when you get in. This isn't a breakout, a retest, and a higher high. Curve. Let's look at curve. This is a breakout. Here's your breakout. Initial breakout. This is your retest to the TWAP. And then this prints a higher high. Gets to 550. But look, 550 compared to where it was in the channel, 2 and change, or dare it was when we were talking about it, 30, 40, 50 cents. Because that's when we were talking about curve. All this time is funny because we've been talking about curve. And it was dirt cheap and no one looked at it. And now that it's at $5, everyone's like, how do I get in? This is not so easy to get in. We have a bearish environment, you know, a deflationary impulse in macro financials. It'll get crushed. It'll get crushed back down to $2, $3. Watch, that's what I expect. Watch this market go multiples. Watch everything run at 10x. Curl will run to 30, 40, $50 with a ridiculous blow off top, and watch it crash to $5, $6, $7, $8. That's probably what I see at this point. Massive irrational exuberance, and at some point, as an extreme deflationary impulse. That would be interesting. The market's crash probably a little bit higher than where we are right about now. But that entails entries are extremely hard. How do you get an entry? Honestly, anyone taking an entry right about now is very late. Very late. I mean, Spell is relatively new. That was very hard to catch an entry. Spell's only a couple months old. This is the perps. This is just FTX listing. But Spell has some sushi swap history. But it's 4 months old. That thing was early. That thing was hard to get an entry, and it was a very spec play. And it's almost impossible to get an entry currently. I don't know. The last thing I know is where an asset is going to go with regard to price. I'm not no fortune teller. I'm not no sorcerer or whatever the hell you want to call me. All I know is Rook is back on my radar. Listen, I tell you guys like Ampleforth is on my radar, and everyone's buying it, but I'm not telling anyone to buy anything. If you're gonna buy something, you buy it in your own accord, but understand it for what it is. You better understand it before you ever take a position. You understand what it is. If you buy Ampleforth, you buy like $1,000. Be prepared to get screwed with regard to transaction fees. If you buy 10 grand, be prepared to get screwed by a rebase. You might see that turn into 4 grand real quick. That was my expectation. I bought 20 grand. I was expecting to see 10 grand real quick. Like I was expecting. I swear to God, I was expecting one rebase on Ampleforth, and I was expecting to see my 10 grand turn into 20 grand. 20 grand turn into 10 grand. But somehow this price point, Jesus, what is it at? This price point has been holding up ridiculously, considering a tremendous increase in circulating supply. I mean, aside from the irrational price action back here, it really can't go up that high. For the price point of Ampleforth to get up that high, the rebase is going to increase supply just a huge, huge amount. Let's see what circulating supply is. PLE. Oh my God, Ample. I mean, I guess it can go up significantly higher. So you know what would happen? How do you get a 10x? You would have to have 10x supply because the price point is always going to be pushed back to $1. So this is obviously going to be a positive rebase. So you have $1.90. The rebase happens tonight at 10 o'clock, and the circulating supply will go up however many percent, 10, 15, 20%. How do you get to a $2 billion circulating supply and like a 2 billion market cap? Basically the same thing. The play would be it goes up, it goes down, it goes up, it goes down. Maybe you have a rational, it goes up and circulating supply even more, it comes back down, comes back down. I mean, generally speaking, that's the play, is it not? Play is you're just it's just growing. This was 20 last week. That's 5 grand in a week, 25%. And the interesting thing is the most interesting thing is that's not on price point. That 5 grand isn't on price point because I put 20 grand in at $2. I was buying up here, $9.90, $2. I bought at the top. That's why I was expecting the rebase to crush the position from 20 grand to 10 grand. It was at 25. That's all interest. It's all interest because people are borrowing because of the positive rebases. The positive rebases give them however many circulating supply increase in their holdings 30, 40, 50, 60%. And they're borrowing a fixed quantity of assets. I mean, I put in about 22, give or take. We're at 27, 28. So that's 6 grand profit in a week. That's pretty cool. But that's the best part is us compounding. You saw that guy that moved about 2 million time over to Ample? So I like Time and I like Abracadabra. Abracadabra. I like Time, I like Wonderland, and I like Olympus Style. But they're different. These are different assets. You know, Wonderland's going for some serious memeage. Serious memeage and RPG and whatever the hell Daniel's cranking out because everything that just they talk about is pure gold and Olympus is special as well. I just don't know where those assets fit in my portfolio. I don't have a position in Ohm or Time. And I chose a position in Ampleforth, an old school asset that most people never understood. I think its benefit actually is that you expect it to be range bound. You expect it to not go above $1, not go above $2. Went well above $1, but not go above $2, $3. And if it gets pushed up here, you're going to have a significant positive rebase, which will push it back down. So when you get an entry in this bad boy, the closer you are to $1. As long as you have over $1 and you have positive rebases, this number will keep at 87,000. There's a negative rebase for whatever reason. Nobody's going to be borrowing. Nobody will borrow, and you'll take a negative rebase hit, however much. But the positive rebase, as long as there's a positive rebase going to occur, the yield will be 87,000. which is quite interesting. I think this is quite sustainable. I think this is has a huge amount of adoption and growth. There's only 207 million in circulation. Let it get to 2 billion. We'll go 10x in circulating supply and a 10x in market cap, which would be 4 bill. What be do in today's day and age? Pretty interesting. So that was one thing I mentioned. We were talking about Ampleforth last week. Just don't look at the asset. Stop looking at it. If you're looking at it on a daily basis, you're trying to think too much about it. Don't think too much about these things. You think I'm thinking about those Ren VMs? We're not really thinking about those Ren VMs. It's just kind of there. You got to learn to let things sit. So took a position here, about 250, give or take. I'll check back in about a year. I mean, take a peek. When I talk time horizon, wasn't this pretty good to check back in about a year? If you look at curve, price range, nope. Let's look at date range. What was that here? Yeah, that here. What's about a year? That's about a year. Look, you check back in about a year. How about that, boys and girls? So I'm saying today, Ampleforth, 1%. You had a $100,000 portfolio. You put $1,000 in. Check back in a year. Not for me to really say what kind of position size you want on Rook, because it's not yet a productive asset. There are other assets that are increasingly productive. So this is a bit of a spec position. I'll tell you guys my position size if it helps at all. Is it really 7% of the? No, that's the diff. 0.95 is 1% of the portfolio. I took a 1% portfolio position in Rook. Ampleforth is 0.25% of the portfolio. 0.25. A fraction of a percent. So for the love of God, don't put 25% of your portfolio into Ampleforth. Don't be degenerate, guys. We've done better than that over the years. You guys know how to do better. Let me hit up some commentary. Pretty good on time right about now. Can Spell go higher? Yeah, I expect it to go much higher. I also am prepared for it to lose a complete 50%, 75%. Whatever happens, happens. I don't mind. The captain, you could arrange. I don't remember what. I've digressed in many directions since then. Barry, love from Netherlands, a pleasure. Jake, Noah, can you explain the relationship between FXS and Frax? FXS is the governance asset. Frax is their stablecoin. FPI is their peg. They want to introduce a like a CPI, but a Frax price index. And it has to do with stablecoin ideology and what is a stablecoin and what is a dollar and what is a unit of account. These are very fascinating abstract concepts that we humans like to define. You got to listen to Sam and like Do Kwon and how he talks about Luna and obviously UST and well, C Spell and MIM are CDPs. It's a collateralized debt position. That's a little different. That's a little different. Anyway, Patrick, new cam looking sharp. No new cam, same cam. Booster Sushi is launching Show You NFT store. I'm happy. I look forward to maybe a more lucrative NFT markets. I got a nice NFT collection. I'm not selling any of it. It's a horrible investment in my opinion. I bought NFTs because I like them and I wanted them, not because I'm trying to sell them. You're not going to make any money in NFTs, guys. You're just going to lose your money. Hi, Noah. What is the best to do with recurve rewards. It's your choice. It's subjective. You collect it, you reallocate it, you take it out to a bank account, and you spend it on a nice dinner out. More lobby thoughts on the proposal for unrealized capital gains tax. They could go fuck themselves. They're all a bunch of idiots. Larry M, let's go. It helps. Thanks. Killis, a pleasure. Paul, what's your take on Chainlink? Chainlink is an invaluable Oracle solution for smart contracts. From an investment standpoint, it's not something I would invest in. Lewis, thoughts on this current crypto bull cycle duration? I think bull cycles are a fascinating concept. Human markets historically have operated in cycles, bull cycles, bear cycles. What a fascinating concept. What happens if you have a very bullish cycle, then all of a sudden you have a catalyst at the macroeconomic level that just says there's no bearishness? It's kind of like March 2020, where the system was ready to implode, and then the federal government injected a couple of $1 trillion and said fuck you, bear market. Bear market. It's kind of like there was supposed to be a bearish cycle, but they didn't let it happen. I don't know how predictable cycles are. I mean, a lot of the old school macro folks, though, that's all they talk about is cycles. That's all they talk about is cycles. I don't know if it's that consistent or that's the best way to describe what's going to play out. I don't know because we'll have 50% drawdowns on everything from Bitcoin to Spell. I shave profits. I am steady. I am ready. That's the thing, you know. Are we going to have 50% drawdowns? Shave profits to what denomination? I think everything is changing. That's what I think. Everything is changing from what we expect and what we think is normal or reasonable or rational. I don't know. Goncalo, hey Noah, do you still DCA fiat into the crypto space? I haven't brought any capital into the crypto space in 2 years. Twix boy, what about buying crypto, not stablecoins? Well, I don't know how to answer that with regard to like the general public and recommendations. I don't know. David has a lot of Cardano NFTs. Okay. I'm sure there's a very active liquid market for those assets. And I'm also sure you're probably kidding. Humberto, that's why you're here with us, because your family don't understand and we do. Yeah, you guys do understand. I appreciate it. 75 people in the stream, 23 likes. We can do better. Living amongst them, the SEC is nothing more than a significant cost to all investors. All I know is every one of their policies causes a burden. It causes a problem. It makes me lose capital. It makes me be stressed and frustrated and trying to understand their rules and regulations. Nothing good has come from them to someone who allocates capital like myself. So I don't understand why they talk of themselves like they're doing something good. All they do for my entire time as an investor is cause problems. Fascinating. And they think they do good. But they haven't. They've caused problems. Only problem. They have never once solved the problem or made a market better or made something better for me. I've seen no protection. I've seen no benefit. I've seen just problem after problem after problem. And that's going back all the way to legacy equities markets to now. Daniel, I know what you do, Noah, and thank you. Thank you, Daniel. I appreciate it. I'll be remembered. Daniel will remember me. Brooklyn State of Mind, what's up? Brooklyn State of Mind, do you videos on farming? No, I do not do tutorials. You want Taiki or DeFi Dad, and those boys do tutorials. I talk. 360 to 180. Trevor needs to team up with a phone company and put a hardware wallet in a phone, right? It's not a bad idea. Magnus, nice to catch a live stream again. Can you explain how the yield is generated for Ample and Aave? Well, people borrow Ample and they pay interest. And the more they borrow, the more interest they pay. The yield is generated because people are paying that interest rate. David, no, please help me. I yield my life savings in the JPEGs. No! What, Cardano JPEGs? My man, I can't help you. Definitely can't help you. Jeffrey, you probably would have lost it anyway. Be nice to David. Cardano JPEGs could potentially be. I don't have no idea. I'm going to stop myself there. Don't buy spell farm a bag with stables. Bam! There's some experience and some logic right there. You got your stables. It doesn't matter whether the market goes up or down, but all of a sudden the interest on your relatively fixed price asset is a potentially and most likely asymmetrically appreciating asset. And that's what I'm talking about. That's some good advice right there. What's your thoughts on Harmony and recent DeFi Kingdom? 25% dip. I don't know. Harmony's cool. High five. That's the best I could say. Dan, good afternoon. Joining late, but happy to be here. Can you please talk about CVX and staking reward strategy? Well, there's not much strategy. You take CVX and you lock it, and they give you money for locking it. They give you money on Vodium. You go to vodium.app, and you are able to lock, and you get money. There's no real strategy to it, my friend. It's just CVX pays you, CVX CRV pays you as well. David, nah, I'm just joking, man. But I'm like 5% of my crypto portfolio in NFTs. I'm about 5% also, give or take, in NFTs. So it's all good. Think of NFTs as something you bought. It's not an investment. It's just something I think it's cool. It's a cultural thing. I remember cards, and I played Magic back in the day. So I got a bunch of NFTs. All right. I don't want to grow up. I'm a Toys R Us kid. Shit. No horns, no tail. I don't think that's a bad position as long as you did your due diligence before entry. Due diligence before entry means you're you're aware of the potential downside, and that's all that matters. Can you please explain what you like about Rook? Well, there's a burn component and it's MEV extraction technology. It potentially is a significant revenue stream if they rebuild the tokenomics a little bit. There's a reason why it went up though, and it's now back above trend. This is a breakout retest on a higher high with the 200 and the 100 and the 50 SMA on the daily pointing upwards towards the 200 EMA, which is a 50 SMA, 200 SMA cross is a golden cross. It's a bullish golden cross. So this looks good. Rook and Keeper DAO is an MEV, minor extractable value, combined with the fact that they have a $100 million treasury and they're about to buy $40 million worth of CVX. At least that's the proposal on the table. And they generate $400,000 a week in income, and they're using that to burn Rook. So I think they're getting their tokenomics in play. Rook was a very early play for me. Back before I had very stringent or very strict monetary policies that I looked for, and I like to see them getting their act in order. They've been doing very well. On Geyser, do you need to continually wrap profits from Ample? I'm not wasting my time. That's way too expensive. I'll check back and listen. Here's the deal with Ample. I'll check back in 76.2 days. Check back. You can't sit and watch your stuff. If my 20 grand goes to $0, shit happens. If your 20 grand goes to $0 and that's devastating, you put too much money in, guys. If you have a $100,000 portfolio, you should have put $1,000 or less. I have 0.25% of my portfolio in here. If I had a $100,000 portfolio, I put in $250. Okay, folks? Some perspective in how I size the portfolio. If you're looking at this every day, thinking about how to compound your 5 Ample rewards, which is about $4 right about now. Look, I got 20 grand. I got $157 in like a week and a half. 157 Ample. So check back in a month. Don't touch it for 30 days. That's the best way to deal with this stuff. Quantify, can you talk about art of portfolio construction and the basic principles that apply as generalisms? Thanks, Cap. Yeah, never go all in, never spread too thin. Concentration is the only way to really make it anywhere with a portfolio. Every damn asset in a portfolio should generate a revenue stream. Anything that's not making you money is pure opportunity cost. Sure, there's something to consider about collateral assets, collateral macro cap assets like Bitcoin and Ethereum, but I think they're relatively stagnant equity. Clearly, there's bigger stagnant equity. Like XRP is the epitome of stagnant equity because it's worth a fortune and it just sits there doing nothing. Same with Cardano. It's complete stagnant equity. ADA. What are you gonna? Where the hell? You can't even collateralize it if you wanted to. You can't collateralize XRP until like Flare comes online or until Cardano's DeFi system expands. But clearly, you can collateralize Bitcoin and Ethereum, so they're functional collateral assets. So not really stagnant equity, but you're only going to want to collateralize them partially, or you want to significantly over collateralize them, like a 3.0 on the health factor or a 30% LTV loan to value ratio, because you don't want to have any risk on your collateral assets. I think the most meaningful collateral assets are interest bearing collateral assets, which is why Abracadabra has means so much. You could literally you're getting 4 or 5% on dollars, and you could collateralize that asset. It's an interest-bearing dollar position that you could borrow against. What an extraordinary platform! None of this shit exists in legacy finance. Art of portfolio construction. Um, what else could I recommend? That's all I got for now. I wish I should document some of my one-liners. I got a whole lot of one-liners over the years. Dan, do you follow the check back in a year mentality for all of your investments, or do you keep up with certain assets regularly? That's a good question. I haven't really been buying and selling at all lately. I have been taking a fair amount of profits from Convex as salary. Well, historically, I didn't follow that rule very well. Check back in a year. I watch my assets, but I have a capacity to watch my assets and really not do anything with them. And that's just because of my age and experience in this space. So, like, I follow that check back in a year type thing, but I also watch them. Like, I have no intention of really changing any of my portfolio positions today. I'm not doing anything today. I'm going to go back to work. I'm going to get some lunch. I have nothing I'm going to do today. Sure as hell, I'm not going to do anything with this. I'm going to wait another 30 days. I'll check 30 days because it says I have to wait 30 days for to get 3x on the rewards multiplier. So I'll wait the 30 days. There's nothing to do here. In 30 days, if this is over 35, 40, $50,000, I might actually deploy more capital to it. Hopefully, Ample will be closer to $1. I'd like to see this crash down to here, down to $1.08, which is exactly where the target is for the rebase. What an interesting asset. This is not like the rebase of Time and Ohm. I'm fascinated by this. I want the damn price to go down. And it should go down because it's rebasing, significantly increasing circulating supply. It should go down. I think this is just going to go up. I think the total amount of capital that's being lent on Aave is just going to go up, 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 and up. It's fascinating because it's all bought, because the rebase is free profit. It's basically just free profit. This is a fascinating asset with the money market. I don't understand why they just launched the money market. Well, I guess it took time, but the money market changed everything for Ampleforth. The small position could easily become a big position, and that's another one for quantified. How do you handle a portfolio? How do you know when to restructure a portfolio? I don't know, but that's something to consider. Meaning, how would I handle it? I don't know. And I could tell you guys, you're not going to know how to handle it either. But what happens if 1% of the portfolio becomes 10% of the portfolio? What do you do? What do you do? Everyone says sell losers, buy winners. Cut the losers go and let the winners run. That's an old one, though. That's from Equities Land. Dan, is there a big correlation with Rook and Compound? Yeah, Rook wants to Keeper DAO likes to have that was their initial managed positions. There's an overtone of of Keeper Dow and Alchemist, the managed positions, and Ampleforth is in the mix with their geysers and their universal NFT vaults. It's funny how that's all kind of related in somewhat. If you look into Ampleforth, you'll see their universal vaults, and then you'll see the universal vaults, which is basically what Visor was working on, and we were talking about this with the Uniswap V3 narrative, and then bam, Spell just destroyed the crap out of well, not Spell, Popsicle Finance just obliterated anything exciting about Visor. So Popsicle has that universal vault ideology or concept or managed liquidity. So they're all this stuff is kind of related. Very interesting. Anyway, Menace is Ample only on Ethereum L1. I think it's on Avalanche. Are you a fan of the metaverse? Sure, I like Gods Unchained. Yeah, Trader Joe Avalanche, Dan. But here's the thing about Ampleforth. If you're going to buy Ampleforth, you can't just hold it. It does nothing. If you're holding the asset, it does nothing. If you're not lending it, that's the whole point. This is the whole thing. You have to lend it. So do not buy it. If you're buying it and you're going to put Ampleforth in your wallet, you're going to fuck up. Don't do that. Don't do that. That's a fuck up. That's wrong. I have to be very explicit telling you guys that. Do not buy Ampleforth and put it in your wallet. Just hold it. It does nothing. And if you don't understand why, then don't buy the asset. Because that's the wrong thing. Literally the antithesis of the right thing to do. That's the wrong thing to do. I'm going to say it again and again and again. Do not buy Ample and put it in your wallet. Do not buy Ample and put it in your wallet. Do not buy Ample and put it in your wallet. No. You can't do that. If you're not lending Ample, you're only going to hurt yourself. You're going to have an asset that you don't understand, and you're going to lose money because you don't understand the asset. You have to lend it. And if you are expecting Ample to go up in price, also not understanding the asset. This asset will not go up in price. So now you're asking yourself, how the fuck am I going to make any money if the asset's never going to go up in price? Do not expect Ampleforth to go up in price. And for the love of God, don't load up your whole portfolio on it. 1% or less. Because 1% of the portfolio turns into 50% of the portfolio next year. Whoa. Wah wah wee wah. Can you show where to sell 3 Curve? You can't. You have to withdraw it from Curve. 3 Curve is a 3-pool deposit on the Curve platform. You cannot sell 3 Curve. Christopher, hello. What is your thoughts on DeFi Kingdom? I have no opinion, but I've heard good things. Tyler, I missed the Rook explanation. You might check videos from a year ago about Rook. MEV extraction, $100 million treasury, $40 million CVX buy. And they're starting to get a hold of their tokenomics. They have a weekly burn component. And I generally think it's heading in a decent direction. I put in 1% of the portfolio. Guys, 1%. Stop throwing around 25% of the portfolio. 1% to 10% changes everything. FM study Mark Kishin Christopher to expose IRS cartel pillage theft. My man FM. Always a pleasure, my friend. Taiki's great. Yes, indeedy. Alex, a pleasure. Zeke Girl, no, I deposit my Ample on Aave, but I don't see it on Geyser. Did I miss a step? You don't need to put it on Geyser. If you put Ample on Aave, you're getting some serious gains. I mean, unless you're putting in like 50 grand, 100 grand, I mean, again, 39% on your money. If you put in $1,000, you're getting $400 a year. Okay, $400 a year, which means your gas fees are probably too expensive. You're gonna you'll save money not going into the geyser. Okay, food for thought. So you don't see shit in the geyser unless you actually deposit your A ample tokens. You wrap them into a UBA ample, and then you're able to stake the UBA ample tokens. So, all right, you want to take a gamble with 1% of the portfolio? You just buy ample and you put it into Aave, and you're going to make 80 something thousand% on your money, which is about 2% a day. So 80 something thousand% APY doesn't make you rich. Well, it can actually. I mean, 5 grand at 2% a day compounded is massive. Continuously compounded as well. It's an absolutely massive number. Guys, you realize this is 850 times on your money on a yearly basis. So the guy who took $2 million worth of time and threw it into here might be a billionaire next year, depending on how the market plays out. But this is why I took a position. Because if I got 20 grand times 850, pretty sure that's 17 million. I want to find out if I can turn 20 grand into 17 million. So let's see what happens. Listen, 20 grand goes to zero. That's shit happens. That point is, but I'm going to find out. I'm going to find out if this goes up. That's a lot of my philosophy too about portfolio management. It's a bet. It's a bet. It goes up, it goes up. It goes down, shit happens. It's another bet. Patrick, Abracadabra slow with Mim replenishing because they're still playing things slow? No, because they're working on Popsicle. Popsicle is going to borrow so much frickin' Mim, it's going to blow Mim through the roof. That's the deal. Quantified. Tried adding my ample on Geyser. The gas fees turned off. Am I missing out? Well, what are you missing out on? You're missing out on 39%. Is that a lot? If you're putting in $1,000, you're missing out on $400 a year. Basically, you're not missing out at all. Dan, the bridge fees are sometimes less than swap fees. Hence why it makes sense to buy in Trader Joe. And yeah, you could buy in Trader Joe and you could bridge back to Ethereum because the bridge fees are less than the swap fees. I could appreciate that. I've done that myself. Why not hold it in my wallet? Why do you think the rebates are worth less than Aave interest? The rebases are worth more than the Aave interest. If you get a 40% rebase, if you have 100,000 ample, and all of a sudden after the rebase you have 140,000 ample, but you borrowed the 100,000 ample, you repay the 100,000 ample, and you just got 40,000 ample overnight. So you just paid 80 grand overnight. So that's the way. That's why people are paying the interest that they're paying. Because if you hold ample in your wallet, Doopy, it does nothing. You're going to go. You don't have more or less. You own the same amount of ample, percentage-wise, of the total amount of ample in circulation. You're not going to be making money or losing money, albeit the value of the position is tied to the price of ample. So it's range bound. That's the whole point. If you just hold ample in your wallet, it's range bound. You're not going to make any money, and you oh, all right. I'll be more specific. If you buy $10,000 worth of ample at $1.80 and it goes to $1, you lost 80 cents on the $1.80. 8.16. What, 30% of your money? 80 on $1.80, 8.6, 50, almost 50%, 40%, 45% of your money. You lost 40%. So 10,000. Now you have 6,500, 6,000, $5,500. But guess what? It'll go back up, and then it'll go back down. It'll go back up. It'll go back down. The asset is not designed to go up in value. So if you just have ample in your wallet, it does nothing for you. It just goes up and down, up and down. You see this for the last year. Amplefort just goes up and down, up and down, up and down. That's the whole point, my friend. I hope that helps, Doopy. Dan, have you changed your mind about not holding a lock CVX position? Oh, I took some of my spell when spell started going up, and I borrowed some cash, and I took a CVX position. It's not large, but it's small compared to my other positions. I bought And it's up like 3x, give or take. So I'm not complaining. I opt for CVX CRV as compared to CVX. That's just me personally. I know clearly like Tetranode opts for CVX, and that's all good. I think one or the other um, is, uh, is a good choice. We'll only know in hindsight which one is better. 92 people in the stream, 42 likes. We can do better. Gillis, W-Matic rewards went to zero and Curve Pool I stake in. Curve rewards are much higher now, though Matic rewards overall comparable without Matic, but curious to know if Matic rewards will return. Probably not. Incentivized yield has always been transitory, and the same will happen with all the other platforms as well. Incentivized yields coming from whatever respective monetary policy will trend towards zero over time. Paul, spell term less than 1% of the portfolio into 33%. Say 1% to 33%. Something went in the right direction. Now, I have no advice whatsoever on taking profits or reallocating because who would sell the winner to buy the loser? You buy the winner. You sell the losers to buy the winner. So I have no idea. You'll only know in hindsight how well you handle such gains. But that's nice to see. Makes me happy. You did something right, my friend. Killer Seek Girl, good question. Thank you. Was wondering about that too. I hope I answered that question good. Food Bear. There is an old sci-fi story of a guy that can live forever, but he cannot understand new concepts past his natural lifespan. A fascinating thought experiment. Yes, indeed, I like that. If you remember it, ping me on Twitter. Holding ample in your wallet is like putting your money in a bank savings. Okay, so that's a good point, BK. BK. It's going to fluctuate between these price points. But that's the point. So what you're saying, BK, is that it's not going to zero and it's not going to $100. This is an asset, and that's the way Amplifort talks about the asset as a reserve asset. That it's going to retain value. It just fluctuates in value between very expected price points. Very interesting. But it's not going to make you money. It's a saving, more like a savings account. So I appreciate what you're talking about, BK. But you have the asset and you lend it in Aave as a savings account, now you're making some serious money because people are taking advantage of the rebase component to make yield. I got to wrap this up, boys and girls. But let me hit Doopy. Holding Ample in my wallet, I receive a rebase, which increases the amount of my Ample 86. No. No, because then you have to repay the debt, and you only make that difference if you borrow against it. Holding Ample in your wallet, but borrow that Ample. Borrow it. So borrow, if you borrow 100,000 Ample, as I said, and the rebase is like 30% or whatever the hell the rebase is, and now you have 120,000 Ample after the rebase, you pay back the 100,000 Ample and you clear 20,000 Ample on a daily basis. So you could put in more work and make some serious money, but it requires more work. I prefer the passive side, which is the lending side of that equation. Humberto, you are buying a percentage of market cap. You own 1%. You will always own 1%. Yes. Okay. So buying Ample and just doing nothing with it does nothing for you. But that's the point. That's exactly the point. But if you're lending it, or you're borrowing. If you're borrowing it and taking advantage of the rebase, you can make money. And if you're lending it, you're making the passive side of that equation. Oh, I don't have an answer for you, Alpha, my friend. Thank you, everyone. I appreciate it. Monday, November 1st, 12:34 p.m. As always, tell everyone to subscribe. After party on Discord. Hit me up on AskVid if you have any questions. I wish everyone a wonderful day, and I will see you again tomorrow. Peace.